Good morning and welcome to Stock Market Today. It's Monday, April 1st, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to chaikinanalytics.com/today, you can sign up for a free email to follow along with this show and get daily stock ideas for you to consider in your inbox every market morning before the market opens. Start of the second quarter, start of the new month, all getting underway on a Monday. So a fresh start to the week as well. Let's dive right in. U.S. equities finished higher in Friday's trading, led by the Dow and the NASDAQ. Small caps underperformed, although they were higher as well. Treasuries were mostly weaker, but finished off the worst levels of the day. The dollar was stronger on the major crosses. Gold finished up 20 basis points. Oil was higher. WTI crude settled up 1.4%. Now, you're outperforming sectors: healthcare, industrials, tech, and materials. Underperformers were energy, REITs, communication services, financials, discretionary, and utilities. S&P futures this morning are up 70 basis points. Good start to the new quarter after turning in their best quarter since the third quarter of 2009 for the S&P 500. Asian equities rallied overnight with China up 2.5%. We'll look at that a little bit later in the show. European equities are seeing gains led by Germany. Treasuries are weaker across the curve with the 10-year yield oversold at support. The dollar is stronger versus the yen, but weaker versus the euro and sterling. Gold is down 30 basis points, and WTI crude is adding on, up 70 basis points here to start the week. So as we dive right in, what do we see? We're moving higher from support with bullish momentum would be the theme here for the S&P 500. Now, we've had some support here in the 2800 level, 2815 area, former resistance becoming support. That's the polarity that often takes place in the market, where former resistance levels become support and former support levels become resistance. Now, we're moving our support zone up today. Support's in the 2775 to 2800 zone, then near 2750. Resistance, 2850 to the 2900 range. RSI remains in bullish ranges, and this has been a key theme for us. If you remember, we've been harping on it for a little bit of time now, that these pullbacks in the market have not induced an RSI to pull below 50. Really what happens is a lot of people like to use RSI, and blindly say 70 is overbought and 30 is oversold. I don't think that's the right way to do it. I think it's a nice starting point, but we want to use it for trend identification, especially strength of trend. In a bullish trend, we would expect the RSI to become overbought, and we would expect pullbacks to not be able to become oversold, and vice versa. On strong downtrends, we would expect to see oversold readings like we did through the fourth quarter of last year, and rallies not be able to get the RSI much back above 60. So 70-30 is a nice starting point, but I think you have to adjust based on strength of trend. So RSI remains in bullish ranges, and Chaikin money flow is rebounding to remain bullish. So the indicators line up. Support is holding so far. That increases the odds that the path of least resistance for the S&P 500 here in the near term will be higher, especially as we think about April seasonality, which we'll look at a little bit later. Now, stocks closed their strongest quarter since the third quarter of 2009. So the strongest quarter in nearly 10 years, following obviously a really weak quarter in the fourth quarter of last year. April has been a bullish month on average. S&P 500 momentum increases the odds of further upside. We talked on that. 10-year yield is testing support at the 2.4 level. It's also oversold. We'll look at that a little further. And futures do point to a higher open here today. That's your market in a minute. And those are the high-level themes that I'm writing about today in my note for Chaikin Analytics clients. Now, our major indices from a power bar perspective: Dow, 3-1 bulls to bears, 6 bullish or very bullish stocks for 2 bearish or very bearish stocks. S&P 500, 111 bulls to 55 bears. So that's awesome strength on Friday. NASDAQ better than 2-1. 26 bullish or very bullish stocks, 12 bearish or very bearish stocks. NASDAQ and Dow outperformed on the day. Small caps underperformed. As I said, they were up, but they did underperformed the broader market. 412 bulls, 338 bears. Bonds downtick, sending yields higher. Healthcare was a big winner on Friday, up 1.2%. Now, from a power bar perspective, healthcare has 17 bullish or very bullish stocks, 1 bearish or very bearish stock, but the relative strength within the healthcare sector is something that's been giving us pause of late. We've been talking about it. I'm not going to beat the dead horse here. That trend remains the same, but perhaps Friday was the start of a reversal. We'll have to give that some time to play out. According to the Chaikin Power Bar, large cap stocks, small cap stocks are bullish. Major indexes are mixed. Now, our stock of the day today comes to us from the metals. The non-ferrous metals in particular is Arconic. Closed at 1911, down 10 basis points on Friday, so an underperformer. ARNC is the ticker symbol here, and it has a very bullish power gauge rating due to very attractive financial metrics, strong earnings performance, and positive export activity. Stock does have some weak price volume activity. We'll take a look here a little bit. But when we roll up the 20 factors, right, each of these 4 categories has 5 factors. 20-factor model gives us that very bullish rating, very bullish stock, strong trend, strong industry group, type of name we want to start to consider. Let's do our analysis and see if we want to get involved. Immediately, for those of you who have been following the process and been watching the show for a while, you know we're not getting involved. Why? Because the market and model are not in agreement. We have that very bullish rating, but the stock is underperforming. We want bullish and very bullish stocks that are outperforming the market. We are oversold. Money flow is, we'll call it neutral. It's been mixed throughout the past 12 months. Stock has regained the long-term trend line, which is still declining. It's just not that interesting for me here. ARNC, perhaps a name to add to a bullish watch list. Keep an eye on it. But until this relative strength improves, it's really hard for me to get excited about this name here. I'm going to add it to a bullish watch list. I will keep an eye on it. I always keep an eye on the names that we talk about on this show, the ones that we're not getting involved in. But, you know, we don't remain dogmatic in our view. When the facts change, we change our mind. And right now, the fact that we're looking for that's key would be for this stock to begin to outperform the market. We're just not there yet. Our sector tracker, looking at the movement of the major sectors of the last 5 days. Industrials, it's a group that we've liked for a tactical trade, as well as to a lower risk way to take advantage of a potential rebound in Boeing. Materials, we've been talking about improving relative strength in materials. Not so much improving relative strength, but the downside momentum to relative strength waning. Discretionary and staples round out the top 4. Financial seen a bit of a rebound here as yields have tested support and started to back up. Healthcare, we're looking for a change to that relative trend. Now, utilities have seen some profit taking, as have the communication services stock. Tech and energy round out the bottom 4. You know the importance that we place on technology. It's the largest weight in the S&P 500. So potential relative trends changing here. We will keep an eye on them, but right now, bigger picture, no real change to our view. The utilities are going to be the one to watch. For those of you who are trading the ETFs, look at XLU. $57 is that key support level. Now, our industry in focus today, oil and gas, equipment and services, comes to us from energy, right? And energy is another one of those groups we've been talking about where the momentum to its downside relative trend has been waning. Still not there yet, and you can see why. Look at services over the past 6 months has underperformed the S&P 500 by 30%. Power bar ratio, which measures future potential, is weak. 22 bearish or very bearish stocks. Only 3 bullish or very bullish stocks. Currently ranked number 21 of the 21 subsectors we track, and it's moved down 2 slots over the past week. Some of the names that we look at there: Core Labs, CLB, Schlumberger, SLB, and ENSCO, ESV, all have very bearish ratings. I'll give you the heads up right now. ENSCO is a sub $5 stock. But let's look at Schlumberger here for an example of the type of name we don't want to own, why we don't want to go bottom fishing. Schlumberger could very easily be the type of name that we refer to as a Chaikin classic bear. What's a Chaikin classic bear? Stock that's persistently persistently has a bearish rating, persistently underperforming the market, and predominantly bearish money flow. And you can see here, this one fits the bill, right? Bearish rating, persistent underperformance, predominantly bearish money flow, clear downtrend here. Now, we've retaken the long-term trend line, but that line is still declining. Schlumberger just a name to avoid. If you want to play the downside, I would do it in a risk-defined way, in particular bearish put spreads. Doesn't look super compelling to me, but it's just a clear downtrend. I think you can see here we're closer to overbought than we are to oversold. Money flow is bearish. So I can't argue with taking the downside trade here. But if you wanted to do it, I like thinking about it in a risk-defined way. Now, our trending names, Friday's S&P 500 gainers and losers. KMX, neutral stock, up nearly 10% on earnings. Celgene, proxy firms are supporting the deal for Bristol Myers to buy Celgene, sent that stock higher by nearly 8%. Micron up 5%, no real news there, but Western Digital up 5%, and Seagate STX up 4%, so obviously a bid to these memory and storage stocks here today. Micron does have a bullish rating. I will say it's kind of starting to look interesting as it's making the reversal from the downtrend. Western Digital and Seagate neutral ratings, so we'll leave those ones alone for now. On the loser side of the board, Phillips Van Heusen, solid earnings on Thursday. Stock rallied, giving some back on Friday, down 4%. HP, we talked about energy being an underperformer on Friday. Helmerich and Payne, HP, as well as Holly Frontier, HFC, down 2.3% and 1.95% respectively. No real news to send Take-Two down 2%, and CPRI, didn't see any news there to send that stock lower by about 1.93%. So let's get into it now. What we're talking about in the note. Mondays, we talk macro themes, look across asset classes, see what's going on. But because it is April 1st, let's dig in on seasonality a little bit here. Over the past 20 years, April has been a solid month. No denying that here. Over the past 20 years, it is just about the one or two strongest month of the year in terms of performance, as well as percentage of times that it's positive. In my note today, I look at data going back to 1950, and what I see there is April as the third strongest month of the year on average over that time frame. And what's interesting is while we're looking at monthly bars here, if we dig into the weekly bars, on a weekly basis, the trend improves throughout the month. So as the month goes on, the weekly seasonals actually get stronger. So we have a bit of a seasonal tailwind here to line up with that bullish momentum that we're seeing in the S&P 500 as it holds support above 2,900. 10-year yield, oversold at support. Here's that TNX. You should know the chart well. We look at it a lot. So what are we talking about here? From a trend perspective, still down. There's no two ways about it. Below the 50-day moving average, below the 200-day moving average. RSI, remember we talked about, in a downtrend, it routinely becomes oversold and can't rally much above 60. We're seeing that here. Clear downtrend with momentum. However, we are now oversold in the near term and at support. So when a product is oversold and at support, you have to start thinking about a counter trend rally. So we cannot rule out a backup in yields here. And when we start to think about that scenario, we want to think about where a move could carry. Now the 10-year yield is about 2.4%. We see resistance at the 25526 level that was previously broken support. So if you're thinking about where yields could go, that's a good kind of starting point to think about where they could go. If you wanted to trade counter trend here, maybe look at the ETFs. That's what you need to be thinking about. The trend is still down for yields, up for bond prices, but we are oversold on yields in the near term and at support. So not going to press the trade at this juncture. Strength in Asia overnight was led by China. You heard me talk about it. Asia was strong overnight. China was up 2.5%. Let's take a look at the iShares China large cap ETF here. What do we see? Above a rising 50-day moving average, 200-day moving average still declining, but at a declining rate. Again, RSI, right? Since this uptrend, RSI has not been able to push much below 50. So we have bullish momentum behind this move, as well as bullish Chaikin money flow. And if we think about just the standard technical analysis, what do we have? We have a support level that used to be resistance. There's that polarity again. This level here at around the 4330 mark was resistance during this consolidation. We broke through and now it's holding as support. I think you want to think about, for exposure outside of the US, looking at a fund like FXI here, especially as it's above that 4350 mark here today. commodities, we're looking at commodities across asset classes. They continue to chop sideways, and that has a lot to do with this sideways action that we're seeing in the dollar between the 50-day and 200-day moving averages. Hard to get excited here, but we're watching the dollar closely to give us a read on where commodities could go. So that's going to wrap it for today. Sign up for the email, chaikinanalytics.com/today. I will see you back here tomorrow. Have a great Monday, everyone.